Hello, here are my counts for gold. So the first bearish scenario is counting this as a 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 4, 5, and so on, looking for way lower prices. So the reason I am stacking 1, 2s is because you cannot count this as a 1, 2, 3, 4, 5 because of overlap here with wave 4 and wave 1, which is the most simple rule of Elliott waves. Therefore, we need to stack 1, 2s. So the only place where you can make an argument that you can have a 1, 2, 3, 4, 5 is here. 1, 2, 3, 4, 5, an impulse there. But then you are breaking this, a very strong guideline, and that is lowering the probabilities. Therefore, it's a higher probability of having 1, 2, 1, 2, and 1, 2, and so on. So, but you cannot stack 1, 2s indefinitely. It becomes like a diminishing return in probabilities after like 3 and 4, depending a little bit on the market. So therefore, this has a lower probability having these many 1, 2s. But nonetheless, the invalidation I am looking for is here at 4627.1, because then if we move up here, we are breaking the structure, changing the character of this move. And then you can make an argument, well, aren't we doing that by taking out these as well? Yes, but then you could count this as a wave 1 and then A, B, C like that, and then you continue down. So I like to be better safe than sorry and take out this, because then you have the A, B, C, a ridiculous wave B, which is extremely low probability. So that is my personal invalidation for this bearish scenario. And that is very important because I am looking for the continuation of the bullish trend sooner or later for gold. So I am looking to invalidate the bearish scenarios one by one. So the other possibility for the bears are counting this as an ABC 1, 2, 3, 4, 5, a leading diagonal like this in a wave 1, and then you have 2 and 3, 4, 5 looking for downside. So here it is a lower probability because a leading diagonal in itself is a low probability structure. It's a higher probability that it is a corrective structure. And also here with wave 4, you cannot have wave 4. Yeah, you can have it, but then you are breaking the guidelines that a diagonal tend to keep within these lines, and you can see that we moved well above here and also here well above it. So that lowers the probability for this being a wave 4 for this scenario here. So then we need to have a move up here in a wave 4 because before this scenario even becomes relevant for an option. But as I said, a leading diagonal is a low probability structure. It's a higher probability that this is a corrective structure according to the book Elliott wave principle. So then if we move on to the bullish scenarios, so my preferred scenario before was this, so ABCW, X, and then you have AB, ABC 1, 2, 3, 4, 5 in a wave C, and then you move up. So here it is an issue with wave 4 because it's the same issue basically as the other scenario. If we have wave 4 over here, you can see that we move well above this line, and that is not preferred. So we need to have wave 4 over here, but this dotted line, you don't want to take out this if you are looking into this scenario, because if we take out this diagonal is no longer contracting, it is expanding like this, which lowers the probability for this scenario. And I don't really think it's possible anymore because we need to take out this high, because you cannot have wave 4 over here like this, because then you have a truncated zigzag, which is extremely uncommon. I don't think I've ever seen it. So therefore you would need to have one more high without taking out this dotted line and taking out this high. And I don't think we can even do that anymore, because then we would touch this dotted line. So therefore this scenario has a lower probability for the bulls. And I am therefore looking into another better fit for this count, and that is counting this as this. So ABC W, WX, Y in a wave X, and then A, and then you have a triangle here with a wave B and looking for a wave C to a wave Y, and then you move up. So this is a better fit as of right now, just because of this wave 4, as I mentioned, does not fit within these lines of the diagonal. It's not breaking rules, it's just breaking guidelines. So this scenario is currently looking for one more low here in a wave C, and then we move up. And this is perfectly viable as well. And it's more common here in a running triangle, A, B, C, D, E, that wave E is overshooting this trend line than it is not overshooting it. So this fits well into the count. So then, if we zoom in here on this triangle, so this is this part, just so you can see what the probabilities are here. So here you have wave E here, and now we're looking for a 1, 2, 1, 2, 3, 4, 5, and then 2, and then 3, 4, 5, and so on, looking for more downside. So this wick is only on my chart. I have compared like 6 other charts which does not have this wick. So therefore I am counting this as a 1, 2, 3, 4, 5. Just because of the other charts being coherent in that aspect. This, if we take out this, then it's a low probability wave 2 at 4154.5. Then this is a low probability 1, and then this scenario is a low probability. And also, if we take out this, this is invalidation for this move down. But the real invalidation for this is taking out wave C here at 4215.5, then this Finnish triangle scenario is no longer valid for the bulls. So then you can ask yourself, is it a possibility that we are indeed finished right now? Yes, it is. So we need to count it like this: A, B, 1, 2, 3, 4, 5 in a wave C. So we have a zigzag A, B, C like this. And now we're looking for upside 1, 2, 1, 2, 3, 4, 3, 4, 4, 5, and so on. So here, if we zoom in on this mess over here to make it more clear for you, here you can count this as a leading diagonal in a wave 1, WX, ABC in a wave Y for a wave 2, and then 1, 2, 1, 2, 3, 4, 3, 4, 5 in a wave 1, ABC, 3, 4, 5, 2, and then you move up. Here it's a low probability wave 2 that we hit on the first, the higher degree wave 2, which lowers the probability for this scenario. And also if we hit this, the low probability wave 2 a lower degree at 3986.5, it's a low probability for this to be a wave 1. Then we need to recount it. And the invalidation is taking out this low. So it is a possibility that we are indeed finished, that this was the low for gold and that this is the start up. But we touched this, which is a lower probability for a wave 2, as I just mentioned. So that is something to keep in mind. So these are my counts, and I will be updating them as soon as more action evolves in gold. If you found this analysis helpful, feel free to subscribe. And you can also find Elliott Wave resources at mellantrading.com. I'll see you in the next one.